I see that we just opened harmonicscanner.com, and the first trade that's opening is a 15-minute trade from around 15 minutes ago. It's Australian dollar, US dollar, which is a very short-term trade. It's a trade that probably will take less than 2 hours or maybe 4 hours. Yeah, like 3-4 hours to complete, and it's already going up. The stop loss is very low, like very tight. So the stop loss is just 12 pips. If your broker is allowing you to open this this trade with a 12 pip stop loss and till take profit 2, it's 33. For the 15 minutes, I sometimes also say maybe it's better to go to take profit 3 level, which is actually 56 pips. Which you can have in quite a short term. So what I'm doing, not wasting too much time, I'm advising here a long position till take profit 3. It will not take so many time. Automatically the stop loss is already here. You see here a risk reward ratio of 4:1. That's really amazing. 56 pips profit. And what's very important is that when you reach take profit 1 level, to change your stop loss to the amount of your entry point and then a little bit in profit, let's say here. So that's very important, that you move that stop loss to up. For the numbers here, if you would check the risk reward ratio that we have here, let's say you have a €100 account and you trade with 0.01 lot, so 1 micro lot. This is a risk of €1.30 and a potential gain of €5.60. If you have a $1,000 account, we are here talking about €13 risk and €56 potential profit in a very short term. Now, what's the important part is when you are in the trade, let's say you're opening it here, and you are on around 20 pips, so you're reaching take profit 1, to move that stop loss level from 0.80438 to move it to the entry level that you are using, that you used in your trade. So basically at this moment it's 85.57. If you open the trade right now, you will see in MetaTrader the first number of your trade is what's the open rate. Then you see an arrow, and after the arrow you see what's the current price, and that price is moving. So when you see that this trade hit like 20 pips profit, which is around €2 per €100 in your account, €2 per 0.01 lot, you will see that you'll reach this amount, then modify the trade and move your stop loss from 0.80438 and move it to entry point. Move it to the start where you opened your trade. This is very important risk management, because at this moment the risk would be 13 pips minus 56 pips plus. At that moment it's only 56 pips plus and 0 risk, because the trade will only, let's say if I shortly draw here, this trade will maybe go up. It will go to take profit 1. This is the moment you change your stop loss. Maybe it will go a little bit down, it will go up, it will go down, it will go up, it will go down, and it will go up. But the point is that it will never, let's say that from this point it goes down like this. If you moved your stop loss, then you are getting out here with €0 loss, or here with minus 11 pips loss. So this is the big difference. The moment you reach take profit 1, you change your stop loss from this number to the entry level that you started. From that moment, it's a risk-free trade. It can go back down to that level. You will get stopped out with 0 loss, but it's better to have 0 loss than a potential of 11 pips loss going up to take profit 3. So this is basically a small step in risk management. It's a very important step. When you are on your way to your target, you can do 50%. You can do when take profit 1 is hit. You can calculate this per trade. But basically, when I always say when I have a one-on-one, so when I have 11 pips, in this case it's like 15 pips risk. When I have like a 15 pips take profit, when I'm one-on-one, I'm changing my stop loss, and then I can go to how high I want to go, and I will quit it or take profit 3 or maybe earlier. So one of the other very important reasons, one of the very important tips that I can give you is to not trade any, to not quit any trade in loss. So I will clear this drawing and I will delete this guy. So let's say, other little part of the lesson before we move on. Let's say this trade goes up, you open the trade here, and then we go up a little bit further, and then it will go down here, and then it will go up. The moment that we see that people are sometimes quitting is here. So they are thinking it goes down, it's going to my stop loss, I don't know, maybe it will reach that point. Here I just lost €1, here I can use €1.50, or maybe if you're on a €1,000 account, here you're minus 10, here you're minus 15, I want to save that €5. So the moment you go out here, the stop loss is on a certain level of resistance, a support resistance line, and it's there for a reason. So the chance that this one really goes to stop loss and then it goes back is not so likely. The chance is bigger that if it goes to stop loss, then it really goes down from that moment. So what we say is when a trade is in the red, when your trade is in minus, don't go out. You have your stop loss level, you calculated your risks, and the moment that you have calculated your risks, you take the chance of this, in this case 15 pips minus or more than 50 pips profit. So you take that risk. Don't go out in the moment the trade is in minus, because you probably just go out too early. It didn't hit the stop loss, and for everybody who didn't go out, it came all right. Okay, so that's a very important thing. Other point is that when your trade is in plus, let's say you go for take profit 2, and you are at this point, and you say like, well, I'm kind of happy with the profit I made, just quit the trade, close the trade, and take your profit. A trade in plus, you can always trade. Also, when you go for take profit 3, and you are a little bit here, you are halfway, and you say like, oh, okay, it's evening, it's the end of the trading day, I'm going to sleep, and your trade is in a nice plus. Let's say that you entered the trade and you went all the way up till 40 pips. Your target is 55, I understand, but when you are happy with your 100, like your €4.30 per 100 pips, so maybe it's a little bit more, like it's like 43 euros on the €1,000 account. When you're happy with that, just close the trades. So a trade in plus, you can always close if you're happy with the number. When a trade in minus you close, then we basically say that it's kind of the choice for yourself to make a loss here, because it still can go all right. So I really advise you to not go out in minus, but only go out in plus. Give it space, and if it hits stop loss, that's the reason why we have stop loss. Okay, so here we see the trade is on the next 15 minutes already. So it's going down a little bit, and then maybe it will go further up from there. But this is a very good trade. I will make a small screenshot for the people that cannot make it live. Also, for the difference this time, the call is recorded because there were some people that were asking me like, hey, I cannot make it live. Can you maybe do the recording? It's like, yeah, we can. So I record it and I will upload it to YouTube channel and share it with everyone. It's just very important, if you're listening to the recording, those trades are live. We are at this moment 31 January, 6 p.m. GMT. This is like the live trading. You can still do these trades for maybe 1-2 hours, but after that, it's really not recommended to do those trades anymore without any further analysis. So just for you to know, don't trade trades too late. The recording is really for educational purposes and for people who are wanting to do the trades quite quickly. Okay. Next trade, US dollar, Japanese yen. One of the trades that we really would like to see is first to go down, then to go up again, and then maybe it will be a little bit longer here. I will zoom in a little bit more. Why doesn't zoom in? Okay. So what you see here is that the trade started to go down, it went up again, and now it's actually in the last 15 minutes at this moment it's going down. If we are looking to the time pattern of this one, we need to wait for around 9 hours for this trade to complete. That's what you can expect. It can be longer, it can be shorter, you never know. And what I wanted to show is that the trade here first went down, then it went up again, and now it's starting already for 2 times 15 minutes. It starts to get down, and it can go down from here. It can also again go a little bit up and then go down. But the nice thing, what I like, is that it's in the 15% box of between entry point and take profit. This is 100%. If you draw half of it, I do this just with the naked eye. It's not really statistical, but like if it's in the first half between entry and take profit 1, it's a good moment to still enter the trade, especially if it starts to go down. So this is a trade that I would recommend to start. It's the US dollar, Japanese yen. It's a 15-minute trade, so it's a quite long 15-minute trade. We are talking about like half a day here, 10 hours. But it's a very nice one. So we are talking about a short position from this, short position from this level. And I need to zoom out quite a lot to show the stop loss. And the take profit from this trade, you can go for take profit too. It's 160 pips. Sorry, it's 38 pips. It's not so much. This is 70 pips. Let me see what the stop loss is. If you really would take the stop loss from entry level, it's 25 pips. It's not so much for long-term trade. It's quite high for 15-minute trade. But if you do that, you want to make at least 50 pips to keep your 1-on-2 ratio. So the 51 pips here would give you this amount, 108,771 as a target. If you put it a little bit lower, let's say you want to go for take profit 2, it's 38 pips. You should put your stop loss around 19 here. Then you have a 1-on-2 risk-reward ratio. The numbers are on the right. So you can go for take profit 2, or you can go for take profit 3. Just if you go for take profit 2, make sure that you're not putting this stop loss at 10953, but to go for 10948. A little bit less risk to keep the reward. For the longer term traders, I would suggest to go for a take profit 3 level. So that's why we are making the screenshot. So take profit 2 with the short stop loss, or take profit 3 with what longer stop loss, and then you have almost a risk reward ratio from 1:3. Good, we are still in the short terms. Let's see if we have something else. Euro, Japanese yen is basically the same one as dollar, Japanese yen. Yes. So Euro, Japanese yen, seems that the Japanese yen is just weak. Sorry, strong. Japanese yen is strong. A euro and dollar will go down then, so it's a sell. Here you see that the trade already has been going down. It has been going up again, down. And then this blue bar, if you saw the candlesticks, basically you see here that this in this 15-minute timing, it went all the way down. And then it went a little bit more up than it was before it opened. And then we have already half an hour down at this moment. So if I look to draw this 15-minute box again, it's like 100%, 50%, you still see that, that we are in the area to trade. So it's quite good. We can trade this one. You can still go in. What you can also maybe expect, of course I don't know, is that it goes down. Basically it went down to this point, then it went up to this point, now it goes down here, so it can go down further. But what also can happen is that it comes a little bit more in this box again and then starts to go down. So you can wait for a little bit better entry point. The only point is when it goes down from here and it's out of the 50% box, I wouldn't trade it anymore. That's a personal advice from many trades that I did. But like I don't trade anymore if they are below this point. Only when they go back into the box and then go down, then this is a good point to start it again, especially if they didn't hit take profit 1. If they hit take profit 1 shortly, come back and start to go down again, you can go in again if it's in this 50% box between entry and take profit 1. So you don't know which one is going to happen. You can start the trade directly. That would be my advice at this moment, because we already had a little market retrace and it's going down at the moment. So this is a trade that's already started, and it's not a bad thing to jump in at this moment. Just checked a little bit of history, but we don't see a lot happening there on the 15-minute chart. So we are looking for a short position here. And the risk reward ratio for take profit 2 is actually 84 pips, which for me would be more than enough. And the stop loss can be a little bit above the entry point. There's a second entry point here, a little bit higher. That would be if it would be an extended shark going through this entry point and then starts to go down. But as we see, it actually already starts to go down, or it needs to go all the way up. So what I would say is to keep this stop loss at 43 points. So basically keep them at this entry level, go for take profit 2. Then you have your 1-on-2 ratio. So I will advise this as a trade for the moment. And then let's say it would hit this stop loss. Then if I can zoom out for this one a little bit, I will shrink it a little bit. For the people who want to know how I'm doing this, it's by holding shift on the time pattern, and then you can make your graph like this without zooming out more. So this would be trade number 1. And let's say this trade is not going as we wanted and it hits stop loss. Then there is an opportunity to go for a short position at second entry point. So you need to wait for that, which has a very short stop loss level. So what I want to show here, I will draw. Let's say we went down and we go up and we hit stop loss. So we go through it. then probably it will come down again. It maybe goes up, so it becomes basically an extended shark pattern. And let's say it goes all the way up and hit this entry level. And after this entry level, probably it will go directly down. But let's say it goes like this, and then we go for the long run. So that means that we enter the trade now. We maybe go out at this point. We don't enter again here, but we really wait for it to be on entry level 2. So you can start directly at entry level 2, or you can wait for it to go down. Then it will have a little market retrace, and then you enter at the confirmation, basically a little bit here, when it starts to really go down, when it really starts to fall. So the difference what we made, if I check what we like here, we would have lost 40 pips. But by entering the market again, at this moment, we will gain again 80 pips on the new entry point to the entry point from the first trade. So we are 40 trades in plus by doing this. That's why the back entry is interesting. And then you can make and then from this entry level, basically, we were already looking for 118 pips. So it's the total pips of this one. The second trade would be 164 pips minus the 40 pips that we lost here would be still 140 pips in plus, which is around 14 euro for a €100 account. So you lose 4 first, and then you make 16 back, so you're on plus 14. So this is a very good option. But I would basically do the trade now. So I made the screenshot already. This is just a very good option for you to know when the trade will not go right. It's a stop loss. You can wait for it, because basically what would happen at that moment is that it becomes an extended shark pattern. And from that moment, it's an expectation to go up, 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 and then down. Okay. If there are any questions during this call, I see we are at 6 people, all languages and cultures combined. But if there are any questions, please put them in the chat. I will move on. But if there are any questions during the day, during the webinar, just put them in the chat, and I can give you any more explanation. Okay, I'm not finished yet. You're welcome, of course. I'm not finished yet. We are moving on for 10 minutes more. But this is 2 very good trades to do. Euro and dollar both sell against the Japanese yen. And maybe even, yes, of course, Canadian dollar, Japanese yen as well. What I would not recommend to do all 3 of these guys, because I can tell you these ones are all related with how strong the Japanese yen is. Of course, you can do it. This one is even quite beautiful because it went down already. It has 2 entry points. People are in the second entry point. So you probably have some preferences which one to trade. Dollar Japanese yen, Euro Japanese yen, or Canadian dollar Japanese yen. Choose for yourself 2 out of 3 and trade them. But all 3 of them is kind of a big risk, because if the Japanese yen from some news will have another outcome, all of your 3 will be all 3 trades will go to loss in the same time, because Japanese yen becomes weaker. This is a quite strong one, so everything goes down. But if the Japanese yen becomes weaker instead of stronger, all your trades, all 3 of them, will be in loss. So with that warning, of course, this is a very nice sell. It is a very nice short position. If we go to target 2, it's 50 pips. I really like it. I'm mostly going for 50, 70 pips. Like, of course, it's great to go for like 100 pips. It's amazing. You have risk ratio from 1 on 3, especially on 15 minutes. It's a very good option on 15 minutes to go for take profit 3. But still, if a 15 minutes, it is like a big 15 minutes long pattern. If you can hit like take profit 2 with like 50 pips, it's really nice. Make sure that you have around 25 stop loss here. So I would say go for this entry. If it really goes back to this one, it can go up. So this is basically a nice entry point using as your stop loss. This is the current market price, the blue line, and go for take profit 2. You have a risk reward ratio of 2.5, meaning that for every euro you risk, you will gain 2.5 euro. It's a very nice trade. So choose one, choose basically 2 out of those 3 to trade. 3 out of 3. Of course, it's all right, because if they go right, they will probably all 3 go right. But just make sure for yourself that you do your risk analysis and don't trade them too big. We have a lot on the 15 minutes today. New Zealand dollar is already really on its way to take profit 2. This is a little bit on the late side for me to take. Hit already take profit 1. So if I would draw, let's say it went down, it went up, perfect entry moment. You see directly it goes down actually to this point. When it would go up all the way here before it goes down, but it's on the 15-minute shark, that will not happen. But when it would go, you can re-enter the trade, because again, it's in this 50% box between your entry level and take profit 1. So here you see this moment can be a re-entry. On the other side, if it went so steep down, it goes so steep up, it's a very risky one that you're not sure if it goes down. So you would really wait for a few candlesticks of red, a few sell candlesticks that you really see it starting to go down, and then you can go in again. At this moment, don't go in there, and if it hits take profit 2, so in this case it didn't hit take profit 2. So if it would have hit take profit 2, I would definitely not trade it anymore in the near future. So this one I'm not going to put in the screenshot list. Thank you, Saule. I'm happy it's clear for you. Let's switch to this little bit longer term trades. This is a nice one, Euro Japanese yen. It's basically a confirmation of the Euro Japanese yen on 15 minutes we saw. Can have some different numbers because it's a little bit longer time trade, but in this case I think it will be the same. I always like confirmations when they are here, putting them also for the 1 hour, and here even for the 4 hour. Basically it's the same trade all the time. You also see that in this case the numbers are the same, so it's exactly the same pattern, but it's just found on a longer time frame. So the bigger the time frame, this one is like from the last 6 days, still gives the hint to Euro Japanese down to sell. So it's the same as before. It's just a very strong Japanese yen at the moment, going making sure that all the other ones go down. So watch out with that one, but you can trade it. What do we have here? New Zealand dollar CAD. We didn't have that one yet. Remember that we traded a pair like this yesterday. It already went to take profit 1. You see it goes up from here. For me, this one should really... This is a nice one, actually, but you need to wait for it. It needs to really come up to this point again. It will take some time. And then starts to go down. Then it would be a good entry level to move further. So don't start here in this case. Why not? Because it already hit take profit 1. I don't even know if it will come all the way up here, but if it hit take profit 1, you want to make sure that it really goes down. So start at this break of the line. So you really see a few candlesticks of 1 hour, like to just 1, 2, 3 hours to see that it goes down, maybe in just small movements like this. And then say, okay, I will start and I will go as well. For now, it's not a trade. If I would calculate from this entry point to take profit 2, it's just 40 pips. It's a little bit not enough. So then I would go, let's say, for 50, 60 pips. So go a little bit in between take profit 1 and 2. Here, this is like 57 pips. You can even go for 77 pips all the way. If you go for, let's say, 77 pips of profit, then you need to calculate around 35, 40 pips of risk. So that's, yeah, you can use stop loss from that level. It's just 32 pips risk and then more than 70 take profit. So you're more on one of two. So it's a really good risk reward ratio. At this moment, I wouldn't trade it. Really wait for it to come up a little bit more. Otherwise, it's not worth it. It's a too small trade. If you would trade it from here to take profit 2, it's just 30 pips. From here, it's 70 pips, but your risk is that it will go much more up is too big at the moment. So I would wait for this one. Okay. USD CAD, little bit the same, only the other side, it's a buy here. Basically the same. 2 New Zealand dollar USD. There's quite a lot happening in the market today. Earlier today, we sent a risk warning for people that it was a very volatile business day. You see quite big spikes here. There was some big news. There's maybe still some big news coming. I think that most of them, it's 25 minutes before 2 in New York. So I think that most of the biggest news is finished, but it can still have some big. I think it will have one more big announcement in 25 minutes. If you're doing those long-term trades from Harmonic Scanner, you don't really have to worry about that. If you're doing scalping with high-risk short-term trades, really watch out when news is coming. You just can Google political calendar or financial calendar, and you will get a list of what kind of news is coming today, and if it has like low risk, high risk, or like low impact, middle impact, or high impact. High impact will be shown in red, and when it's shown in red means that it can do a lot of movements on the market that you don't expect because you couldn't predict the news. You couldn't predict the outcome from that one. So when it's like red, when you're not a news trader and you see red high impact news, just stay away from the major pairs for a second, or for the pairs that that are actually used by the news. So if it's American news, all the US dollar pairs. If it's Europe news, the euro, and maybe even the Swedish crown, and etc. So mostly the euro pairs. And of course, when it's the Aussie or the Australian dollar, New Zealand dollar news in that region, in Asia, stay away from Japanese yen and other Asian pairs. Or just don't trade for half a day. See what the market does, big spikes, and then go in your trades again. This probably also was quite a news event. I don't know how many pips this is, but if I look at this, it's like 93 pips in 1 hour. That will probably was a news event on 24th of January. Can be, I'm not sure, but it was quite a big spike down in this case. Okay, this trade hit take profit 1 again, little bit the same as the last one. Go down, should go up. This one went down, now it should go up back to that 50% box, and if it goes down from there, you can go in. Not a trade for the moment. I think we actually have quite a lot of trades already. I will shortly check if we have some other pairs. Australian dollar, it's an old one. Looking here, yeah, we have a Bitcoin trade, but it's already on the way. So here we have a Bitcoin USD trade. I said before, when you want to search for Bitcoin trades, it's cryptocurrency. We are trading cryptocurrency on IML TV as well. Different sessions. There's much more than Bitcoin on that on the channels there. They're trading Tron, they're trading Ripple, they're trading all kinds of cryptocurrencies. On the Harmonic Scanner since September last year, the Bitcoin was added, and here you see a Bitcoin trade who was formed at 1:45 UTC time. It's like UTC GMT time. So it was formed here in lunchtime, and it went down. Basically, you see here also, you see Bitcoins and cryptocurrency already have the same pattern. It goes down, it goes up, then it went down. On around take profit 1, it's basically doubting because it's a resistance level. It goes to level 2, and then from here, it didn't reach fully take profit 3. So it didn't go down all the way here, and you can say that it starts to go up from this level, then down again, then up, and now down again. So this is not a trade to trade anymore. Even that here shows down, this one not. So I would like to see this. Not the best line, but basically this point should be lower and the highs needs to be lower. So when the lows are lower and the highs are lower, we have a downtrend again. But this is like on a 15-minute chart, so you cannot say it like this in just a couple of, this is like one last hour. What I more want to show is that there's Bitcoin trades on the hot Forex. You can find them there. And the trades are pretty nice, like the harmonic patterns on Bitcoin becoming more and more accurate. And unfortunately, the Bitcoin is going down a little bit, but still, if I quote our CEO, Christopher Terry, there are some support levels for Bitcoin that will not be broken because of big investors. So at the end, the trend for Bitcoin for the next month should be up. That's a long-term trend. Then on Traders Way, we can find some silver and gold trades for the people who are really interested in that. This trade was quite nice, but it didn't reach take profit 3. So this is a very good example again. When you were in this trade, you go down to take profit 1, you move your stop loss level to break even, and from there it's a risk-free trade. It goes down, it goes up. And when it goes down again, let's say that at this point you saw it and you were happy with the results, just close the trades in profit where you're happy with. It went down, it went up, and it went down again. And here you see it didn't reach take profit 3. So if you're not looking to your trades, this trade would not be closed. And then you see it going basically all the way up here, which still didn't close you out. So then you would still be in the trade. And let's see what happened after that. It's going down again. So here it's just very important to see that you should watch your trades every 4 hours, like this is a short-term trade, 15 minutes. You shouldn't leave too long alone. This is a trade of 4 hours. If you see a trade after a couple of hours, it's having a good result. At least change your stop loss. If you change your stop loss, it's risk-free, and then you can ride the way down. Of course, this trade is long gone for people who want to trade gold at this moment. If you are still in gold, the trend for this moment will be still down a little bit. So if you're in profit, you can go out because it's not the harmonic pattern anymore. But the long-term trade at this moment is still down, and it's still not looking that it's becoming a buyer's market. So you can stay in the trade a little bit more and then go out. On the long term, I don't see gold silver trades. This is still a gold trade from before. It's a gold trade from yesterday morning, 5 o'clock. I think we did the trade together. It's a long-term trade buy. So here you also see the short-term gold is down. Can hit few take profit level 2 and 3 here. That's the short term. But on the long-term gold has a very long uptrend. You see, this is the long-term 1 hour graph. So here we are talking about if you only look to the short term, but the long term is up for a long time. Okay, so that's why you can be in a short term gold sell, but in the long term it's a buy, and this pattern shows that it is. This one hit take profit 2 already, so I wouldn't trade it anymore. If you're still in gold from the long term yesterday in a buy, it's also good. So basically, if you're in a sell for gold for the short term, it's okay. If you are in a buy for gold in the long term, it's okay. So just check why you're in gold. Is it a buy? You need to wait long. If it's a sell, take your profit, get out. And maybe if you want, you can go in with a buy for a longer term. This pattern still not finished. This one will take some time. This one take like 4 days. So if you check 4 days, it will take some time to do something like this. Okay. So anybody still open gold trades? I hope that I made clear what I meant. Sometimes this is like one of the harder parts. I don't see any other long-term gold silver trades. We went to all the currency pairs that are currently active, most of them connected to the Japanese yen. Again, watch out, maybe trade 2 of them in 2 or 2 of them out of 3. And there was still also a New Zealand dollar, US dollar. Wait a little bit, and you can go in the sell if it really comes up. Otherwise, it's a little bit too late, and we will have another